It's the day of the Fed with expectations they'll hike rates by 75 basis points, but what's more important is what they say this afternoon. That's coming up on 3 Minutes on Markets and Money. It's widely expected the Fed will hike rates by 75 basis points today and talk about reducing rate hikes to 50 basis points in December, 25 basis points in the first two meetings of next year. That should get us to a terminal rate of 5% on the Fed funds rate, and that's where the Fed is expected to really kind of pause at that point. Now, the big issue for the markets today, again, widely expected the 75 basis point rate hike. What's going to be important for markets is going to be what the Fed says during their presser this afternoon. Any kind of lean towards a more dovish outlook should bode well for stocks. The markets came down yesterday and retested that 50-day moving average. Now, it's important that markets kind of hold that level today. In particular, as we go into the Fed meeting, a violation of that 50-day moving average is going to bring back a retest of that 3,800 level. And again, those two levels in particular need to hold here. If not, we're going to have a retest of the 20-day moving average here very quickly. So markets need to kind of hear what they're expecting. 75 basis point rate hike, slower rate hikes over the next few months. And what would be encouraging, of course, is the Fed saying, hey, look, we see here that inflation potentially has peaked. We're paying attention to that. We are watching employment. We're being data dependent. If they say that kind of language, markets could perform a bit better this afternoon. So again, it's kind of all tied to the meeting at 2 o'clock today and, of course, what they say after. As we go into year end, the next two big reports on inflation will really be the drivers for the markets as we set up to go into 2023. I'm your host, Lance Roberts, for 3 Minutes of Markets and Money. See you back here tomorrow.